Retail on the rise. Several retailers reporting earnings this week like Kohl's, TJ Maxx, Target, Lowe's, The Gap. Many hope for a boost like Walmart and Nordstrom saw last week. Joining us now to talk about the retail environment is Heartland Financial Chief Investment Officer Nancy Tengler. Nancy, great to see you. Thanks for joining us.
Thanks, Maria.
The stocks were really strong last week on Macy's news and all sorts of news in terms of earnings. How would you characterize the retail environment right now?
Yeah, I think the retailers have begun to figure it out. They've tried to make retail shopping an experience. They have shored up their on e-commerce business. So you had Home Depot at 26% growth, Walmart at 40% growth. So I think you're starting to see consumers also return to the malls, which has been helpful.
Now,
as well.
I know you trimmed a little of your investment in Walmart, right? But it's still one of your largest holdings.
Yep, it is indeed. And we also trimmed some of Nordstrom because you have to when it gets overweighted.
Just valuation.
Like that. Yeah, absolutely, and weightings. Yeah.
Well, I think when you look at the retail space, now the biggest concern is we've got sales coming in, but the question is what's going to happen to margins as they spend on shoring up their e-commerce business, and then also wages are rising and potentially tariffs that could impact their margin profile. So what do you say to investors, and what do you think when you look at the stocks and you consider the margin conundrum?
And that's a real concern, to be sure. I think that's the knock on Walmart at these levels. It's never the knock on Amazon. But I think Walmart is remaking themselves in a way that maybe we haven't seen before. And they've made the shopping experience in-store much better. So, yeah, margins are going to get squeezed in the near term. The Flipkart deal is going to cost them, I think it was $5 a share. But long term, they're repositioning for the way that consumers are shopping in the 21st century.
So I've been really surprised to look at the hiring data that comes out of the Labor Department. It shows that retailers have been among the biggest hirers so far this year. Are they hiring because they're opening new stores or because they're putting more people to work in their stores? Do you have a sense of what's behind their hiring decisions?
I believe it's the latter. I mean, if you look at Home Depot and Walmart, they're not opening new stores. Walmart's been closing Sam's Clubs. Home Depot is remaking the existing stores. But when you walk into the stores, you see a lot more higher quality service. I actually shop at Walmart. I'm one of those bifurcated shoppers. It's either Saks or Walmart. And what I see in there is a lot more educated, seemingly on the retail side. These are people that are asking you if you need help, not just pushing around carts. Yeah, it really is. And where I live, the Walmart carries high-end organic, grocery, which is a big part of the story with Walmart as well, and I think will save some of the margin pressure because it's not just an e-commerce play. It's a broad-based play.
Well, that's how you compete with an Amazon.com, is that you provide service, you provide both very kind of bare bones consumer goods, even nail polish, but then things on the high end, because a lot of stores are not doing that. Like CVS, if you go into a CVS, they're clearly only there to fill prescriptions. If you try to find anything in the store that you could buy on Amazon, you can't compete. You can't compete. One thing I want to ask you in terms of the tariff impact, because the Wall Street Journal has that the United States is moving toward new tariffs on China, despite the fresh round of trade talks, 10 to 25% on $200 billion of imports in from China. Consumer goods this time, furniture, computer parts, even luggage. How is Walmart? Have they said anything about how they would deal with that?
No.
Are they going to change the product mix? Are they going to try to avoid keeping products in the stores? I mean, it's impossible to avoid.
I think we're in uncharted territory, Dagan. I mean, no one is talking about that because everyone's hoping it's going to go away. And we don't really know what the ramifications are going to be because it depends on where the product ultimately is made and comes from. So if you look at China right now, 30% of the components that go into deliverable products are made in China. The other 70% is not. So the second order derivatives have really hurt Korea and some of the suppliers. So I think everyone's kind of wringing their hands and saying, we don't know what the implications are going to be, but it certainly will result in price increases or margin pressure. And we've seen Coke and P&G try to get ahead of it by raising prices already.
So we've been having a conversation this morning about the president's comments about the Federal Reserve and interest rates going higher. As well, the idea that there is this narrative that things will slow down going into 2020. Is that where you are, and what is your sense of the impact of higher rates?
Yeah, so I actually think some of this is directed at the dollar, some of his conversation, because the dollar's been strong. That has implications from a trade standpoint that makes our goods obviously less attractive. It gives us as consumers higher real purchasing power. But yeah, I mean, I think that short of a second round of tax cuts, that is kind of where we all settle in. Like, it's probably 2020, which is one of the reasons it makes me worry that we're all wrong. But if we do get additional tax cuts, if the Fed slows down, we have one hike in for this year, not two.
So you think either September or December? You're not expecting both?
We think September, yeah, and we think maybe not. If oil continues to deflate, we think, and prices go down due to the strong dollar, we think inflation maybe gets curbed a little bit and the Fed backs off.
This bull market is now close to record territory in terms of its length. How much momentum do you see in the market? How much longer can this bull market continue?
So, look, I mean, as you know, all of the factors are positive, right? Earnings revisions are at highs, revenues, the leading economic indicators, high consumer confidence, small business confidence. But I think we get choppier from here. I think the short-term catalysts are gone. Markets always have been volatile prior to midterms. 12 months later, since the data's been recorded in 1946, they've been up, so double digits. So we think we get like another 12 to 18 months out of this thing, and it's not straight up. I think, again, investors have become complacent. The reaction to Kudlow's China comments were I think, overdone. And so I think we'll test the highs, we'll come back down, and it'll be choppy until we get through the midterms.
Well, I mean, it's not all that expensive, right? I mean, this market's only up 4% year to date. And the valuations are what, 16 times?
Yeah, a little bit higher, but price earnings to growth ratio is really what we look at. So you're not paying as much for growth as you have historically. We're still below the averages. So we think there's room.
I mean, it's tech that's outperformed. Do you own tech as well?
Yes, we're overweight tech, and we've been selling Google, we've been selling Apple, and we've been buying things like we just initiated a position in Goldman Sachs.
Why are you selling tech? Because of valuations or something else?
Both. I mean, valuations and weightings. As a portfolio manager, that's what you have to worry about. We run super concentrated portfolios, so when Apple gets above 5%, I feel compelled to sell back. So that's what we've been doing.
And you just initiated on Goldman Sachs?
Yeah, we did.
Good. All right. We'll be watching that. Nancy, great to see you.
You too. Thanks for having me.
Thank you so much. Nancy Tengler joining us there.